What is the single biggest lie crypto founders tell themselves when they launch a token?
The average holding time now is few seconds.
We have stopped dreaming. Countless number of times that we have been rugged or scammed of the projects where people and builders and founders have not built what they've promised. If you look 3 years into the future of internet capital market on Solana, you bootstrap this with a budget of maybe $125,000.
That's why we focus on partial tokenization. The first company exiting at $1 billion valuation.
Back to the base show. I'm Sahib, your host, and today it's my pleasure to be sitting with Philip, better known as PFO on Twitter and all the other platforms. We all know that the crypto industry is obsessed with meme coins. We all know that attention in crypto and in our timeline has taken over tokens and projects that actually don't mean anything. But today we have PFO sitting with us, who is a co-founder of Crofts, building internet capital market on Solana, where every token holder wins if and when the company wins. Philip, welcome to the base show. It's a pleasure to have you here.
Thanks, Sahib. Thanks for having me. Glad to be here. And glad to be talking today about crafts and some of the problems that our industry is struggling with.
Absolutely. I actually want to dive deep into your background a little bit, Philip. I have learned that you have been into programming, machine learning, and a lot of those different, I'd say, journeys along the way. But how has that come around to crafts today?
Yeah, 100%. So I have a computer science background. I've been a software engineer since 2017. I started working out at a payments enterprise. So I was there a lead engineer, started as a software engineer, became a lead engineer. And then I was also partly a researcher for new upcoming technologies. So that's how I got into, and especially was interested in the payment section and Bitcoin Lightning. I was deep into that, and then also Ethereum layer 2s, and that also got me into Solana. So I was very fascinated by the Solana architecture, and then started smart contracts in Solana. I early on contributed to Metaplex as well, like wrote the first Dutch auction based on their protocol on top of it. And so ever since, I've been involved in different protocols on Solana. And in 2023 and 2024, did go deeper into machine learning and started actually for a New York data center. I wrote their fine-tuning stack for fine-tuning predictive models. And also this got me back into Solana because I actually worked on a liquidity management solution and used what I learned about predictive models in liquidity management. And this also got me then into learning more about like what's like up with tokens, because obviously tokens are the ones that need liquidity management, and then learn more about the products that actually struggled with, aligning equity and token holders. And I think this is what we're trying to solve with Crafts. And I think it's a very fundamental issue nowadays.
Interesting. What is the single biggest lie crypto founders tell themselves when they launch a token?
Oh, I think that's a very good question. It's also a tricky question. I think one of the biggest lies is actually that we are able to, manage to sustain a token market cap and that we will get enough liquidity into this token. I think it's very, very hard for people to see and to hold tokens for a longer time nowadays, because I think we don't have I think the community early on was very trusting. And I think in 2017, especially people participating in ICOs, they thought of it being treated like equity and it's treated like early stage growth investing. But afterwards, they've been rugged so many times that I think the average holding time now is, I don't know, a few seconds or something like that. Obviously, it's a snipers, but I think that's one of the biggest lies as well that founders tell us, that people will just hold it for a longer time and the crypto is in a good state right now. And I think that's one of the biggest lies. And I think we need to first give the people something to trust so that they can hold for a longer time again.
Wow, you actually said seconds. I was perhaps going to say minutes, but I think you're spot on. So that
I think the average user is maybe minutes. You're right.
no, I mean,
The average wallet, probably not.
actually in the trenches, it's worse. Like you said, it's seconds. But that brings me to a perfect question here, Philip. If you were to explain this to a 15-year-old, what is Crofts trying to do?
Yes, do is you have second-class citizens right now in crypto. So let's imagine you go, I know, you go to the you go to like some kind of festival, or let's put it like this, like maybe you can compare it more to future. So let's say like this, you like in the beginning of the year, you tell someone, okay, in 3 months you're able to get, let's say, potato, okay? And everyone gets like tickets to get it. In 3 months you can get potatoes. And then there's like 2 class of tickets. So there's like 1 class of tickets, but they're all priced the same basically. But you get like 1 class of tickets, let's say like the green tickets, and then you have the red tickets, and you get green tickets, which is like equity to the one side, and you give red tickets to the other side. But basically you only give green tickets to the people that you know, your friends, and the red tickets you get to everyone else. But the red tickets, you tell them like they have a lot of upside, but then in the other side that you can get like more. So whatever is left at the end of the year, like when you harvest, you give like green tickets, everyone gets basically, let's say, the same. But red tickets, they are like unlimited in size. So when you harvest at the end of the year, like, let's say you harvest 1 million potatoes, and everyone in the green tickets get like 500k potatoes, and the red tickets get maybe also 500k potatoes. But let's say the harvest is only 500k, then the green tickets get also only 500k potatoes, but red tickets, they completely miss out. I think that's the same with token holders. As long as everything works well, I think you can give them something, and you can give them buybacks. But like maybe in like after 2 years, those buybacks actually hurt because you can't reinvest into your business. So you can't actually give anything to token holders anymore, and you need to stop buybacks. So it's not really a long game. It's more like a broken game, so you can sell your tickets, so to say.
One thing you said very well, and I personally can resonate, and this is something that I believe the rest of the space would resonate with, is that in the recent times we have stopped believing, right? We have stopped dreaming, and I believe that all comes down because of the countless number of times that we have been rugged or scammed of the projects where people and builders and founders, one, have not built what they've promised, have built but failed, throughout faster, and of course didn't communicate, or 3, have had the clear intentions to come in and make that quick bucks and walk away with all the millions of dollars that we've invested, right? And I believe what you're saying here is like you're giving people back the hopes to be able to believe and dream again.
Yeah, definitely. I think what we are trying to do is like give people the transparency so that they can believe again. So it's clear what they are getting. I think in the past it was always, you don't really know what these tokens represent, and I think governance tokens is a broken model. What we are trying to do really is fix a broken incentive structure that's existing in crypto. As you said, like founder, even though like I think equity structures is actually a system that existed for a long time, and that have a very good incentive model that a founder actually profits of building a valuable and big company and invests back into growth. And in crypto, sometimes founders can profit 7-8 figures if they are just like keeping up momentum for a year or 2 until their vesting stops. But they're not incentivized over 5 or 6 years to build this, unicorns as much as in traditional venture.
I actually tweeted about this, I think it was a few tweets ago. You said for Crofts, especially the token holders, shouldn't actually be making company decisions. And I think a lot of crypto native holders could be a little disappointed not knowing the ability to influence, I'd say, the decisions and directions of the company. Because as you know, everyone in crypto every community member wants to give their opinion. How do you think, or why is a community-led CEO model fundamentally broken, and how do we fix it?
Yeah, I think first of all, I think there's not really enough liquidity to put like all companies on chain right now, and make them liquidly traded. I think that's one of the big problems. And then the second part is that I think that what worked in traditional venture is that VCs basically are like a control organ. Sometimes they block decisions that could have been good. But in our case, I think what crypto enables for, let's say, traditional startups is more rapid capital formation, but then letting founders operate on their own, and basically you have like oversight, but you can't really block any decisions. I think that's very important. And you have community participation. Like, we enable anyone to participate. There's no accredited investors right now. So we really want to tap into DeFi and of this promise of global access to, good opportunities and growth stage startups that you don't have access anywhere else.
Fantastic.
Around Solana.
Fantastic. I think that's that you make a really good point there, PFO. You make a really good point, because I believe when we talk about tokenization as a whole, that's one of the most, in my opinion, one of the most valuable use cases of blockchain and crypto and Web3 as a whole, amongst many other different use cases. And the tokenization of equities is perhaps one that has been untapped, or let's say, I guess we're just barely scratching the surface of it.
Yeah, I agree. I think I've been a big believer, as I come from payments, in this programmable money. I think that was always the promise that I really loved, that you can finally freely program money and it's composable. But now I see the second step is programmable ownership, that you basically, by tokenizing equities, you can really program ownership. Like, you could structure incentive models that not only involve money, but that also involve ownership. Like, you can give someone, let's say your top referrer, you can give him ownership. I think that's a structure that I'm really interested in and building out, because sometimes people that can prove themselves to you, and you can now, let's say you have someone, you're building out the business and you're building out this platform, and you design a referral structure, and you have someone that refers, let's say, 1,000 merchants to you, like someone that's like super connected. He can now earn ownership by helping you on the way. I think that's really interesting. So I think programmable ownership is one of the things that I'm really bullish on, and what we want to enable through Crofts. But at the same time, we don't want you to like put your whole company on chain. We want you to partially tokenize. So that's really our focus. Someone putting out 1 to 30% of their company on chain and have real legal raise behind it, where for a founder, it's only one line on their cap table, but it enables thousands of participants to own part of the company.
So what you're saying here, PFO, is that if I am building a startup and I know I'm looking to get Web2 founders, if I'm looking to get Web2 investors, and I also want the community-based, I'd say, incentivized model to be able to bring them on board with me on this journey, but also be able to have them as a distribution channel for a lot of different things as part of our journey, I could come on to Crofts, raise capital on the platform, on the launchpad, for that 1 to 30%, of course, depending on the terms, under that one single line. And then I have the rest of my company, or let's say 70%, which I can then maybe go raise another 5 or 10% from other VCs, renowned VCs in the offline world. And essentially that becomes the core cap table, which you in return will then manage. Crofts will then manage all the distribution payout whenever I, as a founder of this company, will eventually exit or have dividends to pay out. Is that correct?
Yeah, we basically built a non-custodial way to do that. So we built a legal identity behind it that actually holds a safe with the operating company. So we try to resemble what works in venture investing,
right,
and try to merge it with what worked in crypto. So we have a SPV structure that holds a safe with the operating company, that can also convert, because there's a legal identity that serves as an SPV, and this SPV could sit in BY or could sit somewhere else based on where the operating company is sitting. So this is working then globally. And then we have another structure behind that's issuing the tokens, and that's governed by the tokens. So the part of the company is actually governed by the tokens. but not the whole company is governed by the tokens. So you can still, as a founder, you can later on raise from VCs, you could do private equity deals, you could do all things that actually benefit your equity side. But because you're growing your company, at the same time, the token value should grow. Because for the first time, like this token equity value is really aligned.
Wow.
And it's working similar to how a VC investment would work.
Okay. Now, in that particular, just following that train of thoughts, because it's very interesting, how am I actually unlocking my fund that I've raised on the Launchpad? How and when?
Okay. Yeah. So I think this is now coming down to the question of like capital formation.
Yep.
So what we are doing is right now we are like selecting projects, and then if like let's try one project. So we have this interesting use case right now. We have like one German AI company that wants to do this. They want to raise their seed round very soon. So they're raising around 7 to 8 million. And they're planning to do 25% of their round through Crofts. So that would be around 2 million of the round through Crofts. But how it actually works on Crofts is that we develop the first sealed bid auctions. So they're coming to Crofts. They're saying, okay, this is our total company valuation. So let's say the company valuation is like 40 million, but they want to raise between 40 and 50 or 60 million. So then on Crofts, we set the min FTV is 40 million, the max FTV is 60 million, and then the auction goes live. So first of all, we do like a roadshow. So we, similar to IPOs, we try to let everyone know about the company. We set up an own data room on Crofts for the company. We're building out our own network of capital deployers, and we are sending out this information to like sticky capital instead of, the trenches. So we're building our own community that actually wants to invest into these deals. So we're sending out then the information, but let's say the auction goes live, as you said, right? So the auction goes live, everyone submits their bid, and we can get into details about the sealed bid auction later. But basically after it's settled, we have a clearing price. Let's say it's 45 million, 2 million have been raised. And then on the 2 million, the company, how we try to protect token holders is actually they set a monthly streaming, so a monthly allowance.
Right.
So similar to what's known in the system already or in crypto. So they get, let's say 100K every month. So 100K is provided to the company every month. The only thing is if the safe converts, then the token holders need to decide, do we deploy the whole capital now in order to convert the whole safe, or do we hold off and only part of the safe converts? So let's say after 10 months, they do another round and the safe actually converts. It's priced round at like 80 million. So then there's voting if the whole capital is deployed, only we hold off and only 1 million is deployed. But then basically the clearing price of the auction is the valuation cap. So let's say the valuation cap was 45 million. And if only 1 million was deployed, then only 1 million converts to the equity. But if then this decided 2 million, so the whole money is provided, then the whole funding is actually deployed. So that represents then how much equity the SPV actually owns in the operating company.
Right. Okay. That's actually very interesting. So in some way or the other, I'm bound by milestones and actual traction, and not just time-based, basically, in terms of my unlock.
Yes.
And in that different elements, the community obviously is part of the journey as well, essentially.
Yeah, the community, like, I think that's I think the very interesting aspect about it for the community round, that let's say this AI company, they are launching their cloud soon. So they want to onboard people and want to onboard developers. So everyone has an incentive to basically help grow the product, because of the equity value, the company, the token holders will actually benefit. So there's an indirect benefit for me as a token holder, to actually help grow the product. And we try to give you an additional direct benefit by setting up a referral structure where if you refer someone, you directly earn, but you also indirectly earn because of your ownership.
I have also noticed you mentioned a lot about partial tokenization. Where and how does that come around?
Yeah, so I think we have seen different approaches of trying to put like a whole company on chain, like full tokenization. But I think there's just not enough liquidity for people to hold long term. Like people always say there's a lot of liquidity in crypto, but I think currently there's not enough liquidity to hold the whole equity of a company on chain. So our belief is that by putting 2%, 5% of a company on chain, there might be enough liquidity for that. And we can educate people in the future, onboard more people, more retail people that actually invest into this growth stage company. And that way we can slowly onboard more liquidity and build the track record of successful exits, successful companies, growing the equity value, and then growing the token value and onboarding more people and more liquidity that actually wants to go into these growth stage companies. And that's why we focus on partial tokenization, but also because it's a model that can work with VC raises on the other side and can work for Web2 companies. So we can onboard AI companies that wouldn't have thought of tokenization in any other way.
Very interesting. No, that makes absolute total sense given the nature of the market. Guys, don't forget to subscribe. I definitely like the merger between the practicality of how we have always seen capital formation in the real world and how we have experienced capital formation on in crypto. Let's say, buying tokens on Pump Fund, for instance.
Yeah.
PFO, let's talk about building in the trenches since we talked about Pump Fund, right? I mean, I'm genuinely curious. We have seen projects that had raised 10 million, 20, 30 million dollars, right? And they keep going on for maybe a year or two, and then perhaps they've disappeared and not shipped a single product at all. Your team built Crofts in 6 months, maybe a little bit more shorter, but you guys generated almost $25 million in volume. You only had a budget you bootstrapped this with a budget of maybe $125,000. How did you actually manage to build this in 6 months? And of course, what was that sort of mindset to have built such a impactful platform with a small budget to avoid your competition eating you alive?
I think the timing is right now, like from a legal side. Also, I think like one of our advantages that we have been involved in different Solana protocols. So we obviously have already existing network and we couldn't like leverage that. I think that was very helpful. So, and also doing liquidity management for different launches in the past obviously helped us gain an insight. So what we did actually is what we wanted to try, because I think one of the theses here is that tokenization actually drives distribution, and that when you do tokenization, you can, as we talked about community already, right? That your community helps you onboard users. So what we set out before we even now built the whole legal framework and built the seed doc, what we set out to do was prove that this tokenization model actually works for an actual app. So what we did is we had one pilot that actually launched a token and had a community of, I think, 3,000 token holders. And that 3,000 token holders, when they launched the app, have actually been the first 1,000 app downloads. And the first 1,000 people that actually used the app. So I think that was a strong signal for us that you can actually onboard users from your token holders.
Yep.
And then have them help you onboard others. I think that was very strong. And that was a strong case because the project was a very established project. And that's why they also had 25 million in volume, which was nice for them because they earned through trading fees, which is like the other benefit of tokenization, right? Which we have seen now from Believe, Bags, Pump Fund.
Yep.
Like that trading fees are a good model.
Yep.
I think trading fees could be an even bigger model if you have a proper Web2 company that actually has an equity value of, let's say, 100 million, and they tokenize 5% of their company, put it on chain, they can raise funds from that, but at the same time, they can earn additional revenue from trading fees, which are then non-dilutive, and they can use, for example, this money for incentive models, or even they can buy back their ownership.
Yep.
That's being put up.
Absolutely. That makes total sense because then you have more capital back into the treasury as well. But yeah, for that being said, do you think having too much funding actually kills a startup's hunger, and perhaps that has to be managed through that through a proper mechanism over the period of time?
I think we'll got to figure this out. I think it's tricky to say because I think too much funding is sometimes a problem. Like we see it in traditional venture as well, that sometimes the companies that have too much funding, they spread themselves too thin and go into different areas too quickly and not focus on their one main thing. But I think the too much funding side was more of a problem for Web3 companies, because with a lot of funding, you could get deals with centralized exchanges, and you could launch a token before you even have product. And like our model tries to be different, that we onboard companies that already have a live product and that have at least early signs of product market fit that you can then scale with the community. I definitely agree that it might be a problem, that too much funding could be a problem.
100. Let's talk a little bit more about, you mentioned about the sealed bid auction. Very curious to understand, what does that actually entail? Maybe if you could break it down into very simple terms, as while I was doing my research, and you've mentioned it on your timeline as well, it's models that maybe Google has used for their IPO and stuff, right? I would love to kind of understand what sort of a mechanism is being used in this particular platform and case scenario.
Yeah, 100%. I think that's the other side that we're trying to solve. I think mispricing is one of the biggest problems in crypto.
Right.
Like when you see TGEs and token launches, like one reason why 60 or 70% of ICOs go down from day one is because they sell 5% of their tokens and then there's no incentive to hold, but it also has been mispriced from the beginning, because you don't give people a choice what they price it at, but basically what you give them is buy or not buy, and then you give them additional sell pressure. So I think that model is broken. And I think we need, first of all, we need transparency, what we already talked about. And then we need a model that's actually demand-driven pricing before the market even launches. So I think right now we see the market pricing it when the secondary market hits. But when you go down on the first day by 70, then almost all of your holders already, or ICO participants, are already in the minus. I think we need a model where even pre-secondary markets, we can have a demand-driven pricing. And that's why we built the seed bid auction mechanism, because it's, I think, the gold standard for pricing things in TradFi. And as you said, like Google used it for the IPO, free auctions use it. And so after we have educated participants, because I think you need educated participants to make educated bids, and you're able to have true demand-driven pricing that actually holds up on secondary markets as well. And I think like how crypto will evolve, that we will see way more experiments. And I think this is one of the experiments where there's no information asymmetry. So there's no information asymmetry for anyone to bid. So I think all the historic ICO models, launch models, always had information asymmetry, and they're truly broken. And I think this is the first time that there's no information asymmetry, as long as there's enough transparency around the launch.
Right. So I believe on that part, that's where you guys partnered up with the Arcium to integrate the privacy there as well. And that is interesting because, we've always heard about blockchain being very transparent and giving the insights to which wallet is bidding how much. And perhaps over the years, we've started to understand that privacy is actually a very important layer in this entire transaction, because you don't want to be outbidded by a whale, or two, you don't want to be sniped against or hunted by. So I'm guessing now with this mechanism, you guys are really helping protect the little guy compared to the bigger whales that will then just basically outbid you on an auction, right?
Yeah, I mean, I think this is important, that you cannot see how much anyone else bids, because like if we go back historically, right, like if you have like ICOs, you always had this first come first serve.
Yeah.
So that was always dominated by snipers. So you had like snipers coming in, and then the launch was like sniped in a minute.
Yep.
And then the price was like 3 times, and the snipers, they were the ones profiting, right? So then the project also wasn't able to raise as much as they wanted sometimes. The second thing was, I think, ICOs, so exchange offerings.
Yes.
So there you always had exchange insiders that like, knew more. And now you see this like kind of IDOs or pro rata subscriptions where anyone can commit funding. And someone wants to raise 1 million. And if it's a hyped round, a lot of people and ways will come in towards the end of the race. So it's then oversubscribed, and everyone knows there's so much demand.
Yep.
It just makes sense at the end of the race to come in with a big amount
And then
to
just
get some of that pro rata distribution.
Yeah. And then they'll just.
But it's all public, right?
Correct. And
So everybody knows what. And then with fair launches, I think we're back to snipe it.
and then you also have scenarios where projects use their other wallets to basically just pump in that first $3 to $5 million and then make it look like they're oversubscribed so that everyone else can just ape in.
Yeah. That's a different. That's very tricky.
Classic bad intentioned founders that we've seen in this space. I don't want to name any for the show though.
Yeah, I think that's also hard to avoid. So I think for that, you need to pre-filter on founders, what we're doing as well. I think like an auction mechanism alone can't change that.
Yeah.
I think you need to combine it. And then with the sealed bid auction, I think where the actual advantage is on the bidder side and then the auction mechanic.
Seems you guys have all the ducks in a row, at least from the theoretical side. I guess it's very interesting to see how you guys have built this across. PFO, what's the current status of Crofts? Yeah, is this something that has launched, about to launch? Have you guys got your first project, or how many projects in the pipeline? Share a little bit more about the traction though so far.
100%. I mean, from a technical side of view, right now we have the sealed bid auction live on DevNet with Arcium. We tried around 10k bidders on DevNet, and we have been able to clear a sealed bid auction around 30 to 40 minutes with 10,000 bidders. If you compare that to Sama, which is the privacy network on Ethereum, it took them 32 hours to clear their sealed bid auction. I think they had 40k bidders, so they had a lot of bidders, but it took them 32 hours. And I think that's a little bit of a shill on Arcium as well, because their multi-party computation network is just fast as well.
Yep.
in clearing. But also we structured it intelligently in how we process bids and how we process them on the privacy network as well. That's live on the DevNet right now. We're soon going to mainnet. Arcium just launched their mainnet as well. And we're also getting support from Solana Foundation. So I think that's very crucial to us, that we have the right partnerships with Arcium, with Solana. We also have a partnership with Radium. These are our key partners. And then what we have on the project side, so to say, we have around 7 projects in the pipeline so far,
as you just mentioned just now.
Yeah.
PFO, if you look 3 years into the future of internet capital market on Solana, what does the ecosystem look like, and where is Crofts sitting in that?
Yeah, I think what we are focusing on really much is like going into this, like I would say internet capital markets, broad, in our case, RWA, real world asset tokenization. I think there will be a lot of efforts of bringing real estate on chain. There will be a lot of efforts of bringing stocks on chain. Our focus will be growth stage companies that are pre-IPO, growth stage companies that could be early on as well, like seed stage as well. So that ones that have product life and they can participate, where community can participate and help them grow. I think we will structure a lot of the incentives around that on, let's say, for example, in an AI code review tool, like how can a community really help them grow? So we'll figure that out. That will be core. And I think we will actually bring on a lot of the Web2 companies, AI companies that actually work on interesting use cases for the future and let people participate in AI, biotech, especially also consumer side things. So where a community can actually help. So I think that will be very important.
One thing I want to say here, PFO, we have struggled as an industry to really keep a clean optics of crypto. And that comes to no surprise because of all this sort of bad tricks and bad actors that we have seen in the past. When you go out and pitch to these growth stage companies that may or may not be doing well in their journey, but somehow, they have the very clear mindset of capital raising from the Web 2 world, or let's say the non-crypto world, how do you pitch them to walk into this particular ocean as what we know as crypto or Web 3?
Yeah, I think that's a very good question. I think a lot of them are actually at the moment not as interested, especially for AI, because there's a lot of funding going around right now.
Yeah.
So I think there's just few right now that are convinced that the community can actually help founders that we already know, that might already have like a background and have been in Web3 themselves in the past, that know of this power, and convince them and build strong showcases and use cases that can then convince other founders. I think that's the structure that we need to establish and actually build trust with these founders, because I think we need to improve the reputation of our whole industry.
Yes.
Instead of just trying to, continue how everything was going.
Yep. And I believe I believe Solana as an ecosystem is doing a really good job here as well, because up until maybe last year, a lot of people perceived Solana as a very meme coin chain, right? That's what Solana was only known for. I think today Solana, with the sort of infrastructure that they're building and the projects that they're really trying to support, we can see the shift of moving into more supporting more serious builders and infra and utility that will perhaps change the way people perceive about crypto, and of course Solana as well.
I think Solana is actually doing a great job. Like, the foundation is pushing a lot into the direction of, onboarding stocks, Web2 companies, really pushing the RWA angle.
Yeah.
I think they identified it for themselves as a key area. I agree, it's good that Solana is now pushing for a branding change, I guess, as well. And I think, for example, the Solana Policy Institute, all these things are really good signs that Solana is pushing in the right direction. And also now we see it on the regulatory side, like with MiCA, with MiFID regulation in Europe, which we are focusing on, but then as well with the Clarity Act in the USA and the Genius Act. Like, these are all signs that you can now build this kind of tokenization, partial tokenization of stocks, but also earlier stage equities, instead of focusing on the gray area. I think we now can focus on actually on assets, on fundamental assets that actually have revenue and have value.
Absolutely. I think that's a big change for the industry as a whole. Talking about industry, talking about the market, I've actually read on, again, whole different topic, read a tweet, or rather an article that you published, where on the contrary, you're quite happy that Bitcoin is down 50%. What are your thoughts on that?
I mean, obviously, I've seen different bear markets. They've always been a good time to actually figure out how we want to position ourselves, and you have a lot of time to build things. So for us, it's good because we can now really work on our setup, work on positioning ourselves in the right market. So this is good from that side of view. But also at the same time, I think we as an industry couldn't go on like we used to do. Like, we have seen these like layer 2s launch at billion valuations with on-chain revenue of like $300. I think that was just unsustainable, and it was also absurd what layer 2s and what other kind of protocols raised from VCs, and the VCs supporting it now need to question themselves, because they won't get money from LPs anymore if they keep funding projects that can't have an exit. So now we see this big shift of, okay, revenue is becoming important. All the fundamentals that are important in traditional fundraising are now important in our industry as well. And I think that's a good shift, that maybe in the next bull run, we have tokens that people can actually buy. Even if Bitcoin goes down or Solana goes down, these tokens might even trend up because the companies behind them are actually growing and making more money. Solana and Bitcoin can become more commodities. Like, Solana recently been labeled a community, which is nice as well for our industry.
I believe you couldn't have said it better. Definitely, and in all honesty, I agree with you there because, like I said, we are, for anyone that's been around, we are tired, right? We're tired, boss. We're tired, right? I think we're tired of all the scams and the bad actors and perhaps
But not of winning. Not tired of winning.
Not yet. We're always we're not Donald Trump, sir. We're not tired of winning yet. Make us win more. We want more of those wins. But that being said, PFO super bullish on what you guys are doing. And then I perhaps would like to ask with one of these interesting questions, right? Like, what are your personal beliefs of how crypto is evolving, and perhaps how Crofts is positioning itself for the next 5 or 10 years, right? Because I know a lot of crypto founders don't really think that far, or perhaps maybe they are, but along their journey, somehow they see that sort of big funds, and it doesn't incentivize them to kind of build anymore. That Bitcoin is down 50%. Sort of the mechanics that what are your thoughts on that? Locking yourself into as well as part of the journey?
Yeah, 100%. So we're not planning on launching a token the old way. We are planning to use the Crofts model ourselves and tie our own token to our own equity. I think this will be done in our own phases, right? Like, we want to build out the product, we want to build out traction on the side, maybe have like 20, 25 successful tokenizations done, and only then launch our own token that's tied to equity. So prove ourselves, find product market fit, and only then launch a token and you really use it as a distribution mechanism, but also give the people that actually hold it the upside to hold it long term. And I think we will experiment more. Like, we have already a few very good ideas on how we can incentivize people to hold for a longer time in order to educate people, as we said, like to go from people holding seconds or minutes again to go for them to hold maybe for a few years or lock up the tokens because of the participation. I think there have been interesting mechanics in the past, but if we tie it also to something with fundamental value, staking mechanisms or other kind of mechanisms can prove to be warpy if we're educating people why you should hold long term. And if we build the track record, right? Like the first company exiting at $1 billion valuation where token holders actually profit off it, that will set a historic milestone.
Absolutely.
And will be track record from where we can build further.
Absolutely. Again, I will say this. I am already a fan, and I will definitely be on that wait list because I'm truly one of those investor types that want to be able to hold for months and years, right? I'm just literally, it's tiring to actually have to babysit your bags and look at your wallet and look at the charts and wait to see which one of your bags has been, or investments have been drugged, or which one's going up. I just want to believe in the founder, the vision, let them cook, let them actually deliver, and hopefully ride the upwave together. So very, very interesting what you guys are doing. Again, very bullish to see how the first use case goes, and very well rooting for you from the sidelines, and not just sidelines, but also being part of the participation on the wait list.
Yeah, maybe you have an agent even then, like an AI agent analyzing the quarterly reports of the companies to decide which ones you want to go into. So like you have more fundamentals or something like that. To like keep up with what is someone announcing on Twitter in order to the coin popping. I think that's not a good model. Yeah.
PFO, where can people find you, and perhaps how do people get in touch to be able to apply for the next Crofts cohort?
Yeah, you can reach out to me on X. I'm PFO_SAC on X. You can also find me under the same handle, PFO_SAC on Telegram. I'll reach out, let me send details there. You can also go to crofts.dev. We have a discovery platform live for good projects already. So they are all pre-launch. There's over 140 projects. You can check them out. And you can also sign up to our waiting list as a qualified investor right now.
Guys, I will have all the links down below for you so you don't get lost. But it is I guess the biggest takeaway here, guys, is it's time to believe again. right? What Crofts is doing and introducing is something that we're all perhaps waiting for, and something that we should all be looking out for, because it's that time to believe and have the reason to hold, and perhaps not get wrecked in the trenches yet another day. But until then, guys, PFO, it was a pleasure having you on the base show. I'm pretty sure all of us will be rooting for you and hopefully participating as well. But until then, thank you so much, and hope to see you again, man. Until then, guys, Sahib, your host, signing out. Cheers.